Hey, welcome back. So, Bitcoin hit $82,499 on Wednesday, its highest price since January 31st, and then it got rejected, and now it's sitting at $80,717. And a lot of people are asking, is this really running out of steam? I want to show you three specific technical signals right now that most channels are completely ignoring because I think they tell you something very important about where we actually are in this cycle. Let's get into it. The third signal from the derivatives market actually surprised me when I saw the numbers. Stay with me, by the way. So here's the chart. Bitcoin tagged $82,499 on Wednesday, the highest price since January 31st, and got rejected. The 200-day EMA at 82,000 acted as resistance exactly as suspected. This is a technically significant level. I've been marking it on this chart for weeks. The rejection came with $270 million in long liquidations in 24 hours. That means traders who were betting Bitcoin goes up with leverage, they got wiped out at the rejection. That selling pressure is what pushed price back to $80,717. Now, here's what the RSI is telling us. It's around 55 to 60, pulled back slightly from the high, but still healthy, not overbought, not oversold. The 200-week EMA at 68K is a solid floor well below us. Support levels to watch on a pullback 78K to 80K is the first zone, below that 75K to 77K. Now, the derivative signal, because the numbers here are pretty significant. If you want to trade around levels like this, I use BitUnix, no KYC. Deposit in 2 minutes, link in the description and pinned in the comments. Get set up before the next move. Signal 1, the derivatives market is showing extreme positioning reset. 10 days ago, the long to short ratio among top traders at OKX was 1.20. That means for every short position, there were 1.2 long positions. Today, that ratio sits at 0.27. In 10 days, institutional traders went from heavily net long to almost 5 to 1 net short. This is a massive positioning shift. And at Binance, top traders slashed their long positions to the lowest levels in over 4 weeks. In plain terms, the smart money pulled back hard after the $82,499 rejection. Now, here's why this is technically interesting rather than just bearish. When positioning becomes this one-sided to the short side, it creates the setup for a short squeeze. If Bitcoin pushes back toward 82K and clears it, those shorts get forced to cover. That buying pressure can accelerate the move significantly. The liquidation heatmap shows a dense cluster of short positions stacked between 82K and 85K. Now, there's signal 2, the ETF outflow context. ETFs recorded $268 million in outflows on Thursday. That sounds bad, but here's the context that matters. The SPF 500 hit all-time high on the same day. This is not a broad de-risking event. Stocks aren't falling. Investors aren't running to cash. This looks more like profit taking after fast move than any kind of structural exit. And Coinbase revenue dropped 31% year over year. Robinhood's crypto revenue fell 47%. That tells you retail is not in this market right now. Retail disengagement at 80K, not fear, just absence, is historically a mid-rally signal, not a top signal. And there's a signal 3, the bottom signals argument. This is the one I find most technically compelling. Analyst Matthew Hyland pointed out this week that when he looks at the dozens of on-chain and technical indicators that have historically fired at Bitcoin cycle bottoms, every single one of them fired simultaneously when Bitcoin hit 60K in February. Not some of them, all of them. His argument is that in mid-bear markets, these signals don't fire in synchrony. They fire in random clusters. The fact that they all fired together at 60K is characteristics of a cycle bottom, not the middle of a bear market. Michael Van de Pope said the same thing this week. The short to long-term realized value ratio is showing levels consistent with the end of bear phase, not the beginning of one. And then there's the macro catalyst that could change everything, and almost nobody is connecting it to Bitcoin directly. Here's the macro picture, 3 quick points. First, Kevin Warsh is widely expected to replace Jerome Powell as Fed chair. Warsh recently disclosed significant holdings in cryptocurrency assets and companies. He has previously expressed pro-Bitcoin views. A pro-crypto Fed chair changes the entire monetary policy backdrop for Bitcoin. That's not priced in yet. Second, the US dollar index has been weakening for 2 months. A weaker dollar historically benefits scarce assets. Bitcoin sits at 21 million hard supply. Gold benefits from dollar weakening weakness, Bitcoin benefits more. Third, Jack Millers from Strike said something this week that I want to mention briefly because I think it's right. He said Wall Street getting into Bitcoin is not a threat to Bitcoin. If Wall Street participation could kill Bitcoin, it was never going to succeed anyway. Morgan Stanley just launched crypto trading on E-Trade at 50 basis points, cheaper than Coinbase, Robinhood, and Schwab. More access, more buyers, that's structural demand growth. And now here's exactly where I stand and what I'm watching. Before my take, Bitunix is where I trade. No KYC, link in the description and pinned in the comments. Here's my honest read. The rejection at $82,499 is real. The ETF outflows are real. The positioning reset is real. I'm not dismissing any of that, but a bottom signals argument is technically strong. The derivative setup with the long-short ratio at 0.27 and a dance short stack above 82K creates significant squeeze potential if Bitcoin can clear that level. My plan is simple, two scenarios. Scenario 1, Bitcoin holds 78K to 80K as support and makes another attempt at 82K. It clears it with conviction, I add. The short squeeze kicks in, Kyle chases next target at 85K comes into play. Above 85K, analysts are pointing to 100K as next major level. Scenario 2, on the other hand, Bitcoin loses 78K, will pull back to 75K to 77K, I add there. The bottom signal argument still holds. The 60K low was the bottom. This is consolidation. Either way, I'm not selling into rejection at 82K, not when every bottom signal fired at 60K, not when retail is absent, not when a pro-crypto Fed share is potentially weeks away. Key levels to watch, 82K to break through, 78K to hold as support. Let me know what you think in the comments. Thank you so much for watching and I will talk to you guys in the next video.